Welcome to the Deep Dive, your shortcut to being genuinely well-informed. The pharmaceutical industry, it's more than just pills and treatments. It's this huge economic force, right?
Yeah.
Always changing, always innovating, and it touches all our lives.
Absolutely. It's a fascinating sector.
So when a big player like Torrent Pharmaceuticals puts out its quarterly results, it's not just numbers on a page. It kind of gives us this unique window into, well, broader economic trends and where health innovation is actually heading.
Exactly. It's a pulse check, in a way.
And that's our mission today. We're doing a deep dive into Torrent Pharma's Q1 FY26 results. We're going to unpack the key numbers, look at the stories behind how they're doing in different places globally, and explore their big strategic moves.
The goal being that you, listening, walk away feeling like you really get the picture.
Precisely. And just so you know, we're pulling our insights straight from the source material, the Q1 earnings call, the official board meeting results, the financials, and their media release that summarizes everything.
All the primary stuff.
Okay, let's kick things off with the headline numbers. What did Torrent Pharma actually report for Q1 FY26?
Well, the top line total revenues hit Artis 3,178 cores. That's up 11% compared to last year.
Okay, 11% growth, pretty solid. What about profitability?
Operating EBITDA was Rs 1,032 crores, which is a 14% jump year on year. But there's a bit more to it.
Oh, like what?
They had a one-off expense, about Arcos 15 crores, related to an acquisition. If you adjust for that, the adjusted operating EBITDA is actually Rs 1,047 crores.
Ah, okay. And that gives a different margin picture, I assume.
Exactly. It pushes the adjusted operating margin up to a pretty healthy 32.9%.
32.9%, wow. And the bottom line, net profit.
That saw a really significant jump, 20% year on year, landing at Rs 548 crores.
So strong growth across the board. What's driving this? Any particular segments?
A big part of it is their branded markets. They continue to be the main engine, accounting for 72% of total revenue this quarter.
Right. The branded side is key for them. And financially, how are they looking overall? Debt, R&D.
Their net leverage is quite comfortable at 0.45. And they're definitely investing back into the business. R&D spend was Rs's 157 cores.
Which is what is a percentage of revenue?
That's about 5% of revenue. And importantly, it's a 16% increase in R&D spending compared to last year.
Okay, so investing for the future there.
Yeah. And what's fascinating, maybe even a bit bold, is that 32.9% adjusted margin. Management has basically said that's the minimum they expect for the whole of FY26.
The minimum. Wow. That raises a question, doesn't it? How do they plan to hold that line, especially with R&D spend going up 16% and, other reinvestments?
That's the million-dollar question, or maybe billion-rupee question here. It suggests, well, a lot of confidence.
Confidence and efficiencies, maybe, or new high-margin products coming through the pipeline.
Could be both. It definitely points to a very clear strategic view of where they think they can generate value. They seem convinced these investments will pay off significantly, maybe in ways that aren't fully obvious just from this quarter's results. It's more than just holding steady. It feels like a calculated push for higher growth.
Okay, let's zoom in on their home turf, India. This market is obviously massive for them, but, India's pharma market is incredibly competitive. So how are they doing there? What's the story?
Well, the top line number for India is Rs 1,811 crores, which is 11% growth. Pretty good.
Just 11%, or is there more to it?
Oh, there's definitely more. The key thing is how they're doing compared to the overall market. Their chronic business, which is a major focus for them, grew at 13%.
Okay.
Now, compare that to the overall Indian pharma market, the IPM. According to the AIOCD data, the market only grew about 9% in the quarter. Some sources say 8%, but either way, Torrent's outpacing it.
Right, so they're gaining share, especially in that chronic segment. How does that 11% overall India growth break down?
Yeah, the AIOCD Farmer Track data gives us a good look. Their total growth was actually 12.2% according to that specific tracker. And it breaks down like this. 3.5% came from volume.
Okay.
A solid 6% came from price increases, and 2.5% came from new product launches.
Interesting. Only 3.5% volume growth. How does that compare to the market?
That's the really telling part. The overall market volume growth was apparently just 0.3%. So Torrent's volume growth, while not huge, is way ahead of the market. It shows they're really pushing ahead.
And they have strong brands backing this up, I imagine.
Definitely. They have, I think, 21 brands in the top 500 within the IPM. And get this, 14 of their brands are now doing over Rs's 100 crore in sales each.
Wow, 14 blockbusters in the Indian context.
Pretty much. Plus, their consumer health site is also doing well. They mentioned the Curatio brands, which they acquired, and also their Teddy Bar brand specifically getting good traction.
And how big is consumer health for them now?
It's becoming noticeable, around 10–15% of their total India portfolio now.
Okay, so strong brands, outperforming the market. What's driving this strategically?
A key piece, I think, is their field force expansion. They're putting more feet on the street. Their MR count, medical reps, went up from 6,400 last quarter to 6,600 now.
And planning more.
Oh, yeah. The plan is to hit somewhere between 6,900 and 7,000 by the end of the fiscal year.
That's quite an expansion. Does it pay off quickly?
Not instantly. Management themselves say it usually takes 12 to 18 months to see the full impact of adding new reps. But they also pointed to their 2-year compound annual growth rate, the CAGR, for India.
And what was that?
It's running at 13%. They highlighted that this is significantly higher than before they started this big expansion push. So the signs are there that it's a good long-term investment already starting to show results.
And here's where it gets really interesting for me. They mentioned new products contributing 2.5% to growth this quarter. They launched, what, 4 or 5 significant new products and maybe 9 or 10 line extensions in India over the past year. Given how slow overall market volume growth is, does that 2.5% from new stuff feel particularly important?
Absolutely. I think it's crucial. In a market where volume is sluggish, being able to drive growth through new launches is a massive advantage. It suggests their R&D is translating into actual market success. And it's not just about squeezing more out of old products or relying solely on price hikes. It points towards a more sustainable, innovation-led growth path in India.
Okay, so India looks strong, a real powerhouse, but Torrent is a global company. Let's zoom out and look at their international business. Starting with Brazil, that's a key branded generic market for them, right?
It is, and it's another strong performer this quarter. Revenues were Rs 218 crores, which is 11% growth in rupees.
Okay, and in local currency, sometimes that tells a different story.
It does, and in this case, a better one. In Brazilian real, the growth was actually 16% year-on-year, reaching $143 million.
So stronger underlying growth than the rupee number suggests. How does that compare to the Brazilian market overall?
They're outperforming there too. Torrent grew 14%, while the IQVIA data shows the overall market growth in Brazil was only 5%. So clear market share gains.
What about the pipeline in Brazil? Are they set up for future growth?
Seems like it. They mentioned having 62 molecules already filed and waiting for approval from Anvisa, the Brazilian regulatory agency.
62? That sounds like a lot. Do they expect many launches soon?
Well, the timelines vary. Clone submissions, which are basically copies of existing approved drugs, can get approved in maybe 6 to 9 months. Other newer filings can take much longer, like 30 to 36 months. But based on this pipeline, they're expecting to launch around 8 to 10 products per year.
Great, a steady stream of launches then. You mentioned the rupee growth was lower than constant currency?
Yeah, there's still about a 5% gap there. It's basically a hangover effect from past depreciation of the real against the rupee, even though the real has appreciated a bit recently. It just takes time for that to fully wash through the comparisons.
Got it. Now, speaking of Brazil and new opportunities, the semaglutide drugs like Ozempic and Wegovy are huge globally. What's happening there for Torrent?
Right, this is a really interesting dynamic. The market there is shifting fast. Ozempic, the older one, is actually declining a bit, maybe 5–7%, down to about a $350 million market size.
Declining, okay.
But Wegovy, the weight loss version, is exploding. It's already doing $150 million per quarter, which annualizes to like a $600 million product. It's growing incredibly fast.
And Torrent's plan?
They're actively working on generic versions of both. They want to be in that first wave of generics when the patents allow.
What helps them there? Is it just about being fast?
It's also about navigating the regulations. Anvisa in Brazil is apparently quite strict. They require things like 2 copies of prescriptions and detailed pharmacy records, partly to minimize off-label use.
How does that help Torrent? Sounds like a hurdle.
It is a hurdle, but it's a hurdle for everyone. It potentially creates a sort of regulatory moat. If Torrent can navigate these complexities effectively and get their generic approved early, the strict rules might actually limit the number of competitors who can follow quickly. It could give them a longer runway in a very lucrative market.
Interesting angle. Okay, let's shift gears to Europe. Germany, how did things look there?
Germany was, let's say, more challenging this quarter. Revenues came in at R308 crores, which looks like 9% growth in rupees.
Whoa! I sense a but.
But in constant currency, in euros, the growth was only 1%, just EUR 32 million. So almost flat underlying performance.
What caused that slowdown?
They pointed directly to a supply disruption at a third-party supplier. And that's a big deal for them in Germany because apparently about 75% of their German business relies on products sourced from third parties.
Ouch, 75%. So a big chunk of their portfolio was hit by something outside their direct control.
Exactly. And management wasn't overly optimistic about a quick fix either. They expect this disruption could last for at least a couple more quarters.
So are they rethinking Germany?
Doesn't sound like it. They emphasize they're still the fifth largest generic company there, with around 6% market share. They talked about sticking to their strategy, aggressive new launches where they can, improving costs. It seems they see this as a temporary external issue, not a reason to pull back long term.
Okay, bit of a bump in the road there. Let's cross the Atlantic now, the U.S. market. Always a tough one. What's the story there?
U.S. performance was actually quite strong this quarter. Revenues hit Rs 308 cores, which is up 19%.
19%. That's significant. Constant currency.
It's still strong. 16% growth in U.S. dollars, reaching $36 million.
What drove that growth? New launches.
Partly, they mentioned getting better market share on some recent launches, but also just increased buying on existing contracts. So a mix of factors.
Is the U.S. business profitable for them yet? I know it's been a focus area.
Not quite. Not after you factor in the R&D allocated to the U.S. But they did say the losses are expected to shrink quarter on quarter. So moving in the right direction on a path towards profitability.
Any significant launches happening or planned?
Yeah, they expect about 10 launches in the U.S. this fiscal year. Some might be older products, but they're hoping for some day one launches too, getting in right when a patent expires.
Did they launch anything in Q1?
They did. 4 or 5 products went live. They highlighted small granules, which sounds like a pediatric product, as the biggest one. And just last week, they launched Sacuval.
Sacuval. I know that one. That's a big cardiovascular drug, isn't it? Lots of competition expected.
Absolutely. And that's what's fascinating. They mentioned 10 players launching generics on day one for Sacuval.
10 players. Wow.
Yeah, it just shows you how intense the U.S. generic market is, especially for major products. It really puts pressure on pricing and market share right from the start. How Torrent navigates that kind of competition with Sacuval and other launches will be really key to watch for their U.S. profitability journey. It's all about execution in that environment. #Tag2Win. Strategic shifts and financial fortitude.
Okay. Beyond the quarterly performance in different regions, Torrent also made a massive strategic announcement recently. Let's talk about the JB Pharma acquisition.
Right, that's a huge move. They've signed a definitive agreement to take a controlling stake in JB Chemicals and Pharmaceuticals, JB Pharma.
Just to be clear, this deal didn't impact the Q1 results we've been discussing, correct?
Correct. This is all perspective. The Q1 numbers are purely Torrent standalone.
So what are the mechanics of the deal? How's it structured?
It's happening in phases. First, Torrent is buying a 46.39% stake from the existing promoters, paying about Rs 11,917 crores, which works out to Rs 1,600 per share.
Okay, almost half the company.
Then, because of that, they have to make a mandatory open offer to public shareholders to buy up to another 26% of the company. The price for that offer is a bit higher, Rs 1,639.18 per share. There are also some smaller stakes being bought from employees.
And after that, is it staying a separate company?
No, Phase 2 is a full merger. JB Pharma will be merged into Torrent Pharma. The plan is for JB Pharma shareholders to get 51 Torrent shares for every 100 JB Pharma shares they hold.
Okay, a complex transaction. How's the approval process going?
They said all the main filings are done. The open offer documents, the merger scheme, the application to the Competition Commission of India, the CCI, everything seems to be largely on track, and they expect approvals within about 6 months.
Now, acquisitions like this always raise questions about synergies, right? Especially things like sales forces. Are they planning to combine the MR teams?
That's a really interesting point they addressed. You might expect them to look for cost savings by consolidating the field forces where they overlap.
Right.
But Torrent actually said they plan to continue with their own field force expansion plans, even after the acquisition, focusing on areas where there isn't overlap.
So they're keeping both going, essentially, or expanding both.
It sounds like they see an opportunity to maximize total market reach, rather than just cutting costs immediately. It suggests a really aggressive growth posture, using the acquisition to get bigger, and continuing their own organic expansion at the same time. It's quite a statement.
Definitely signals ambition.
Uh-huh.
Okay, finally, just a quick check on their overall financial health. Any other key indicators?
Yeah, a couple of things. The board approved raising funds through NCDs, non-convertible debentures or bonds, both secured and unsecured. gives them flexibility.
Okay. And debt levels.
Their debt-to-equity ratio looks healthy at 0.33. And another positive sign is their interest service coverage ratio, basically, how easily they can cover their interest payments with earnings that's improved to 14.12, which is quite strong.
Good financial footing then. Anything else? Taxes.
Just a note that they're moving to a new tax regime starting this fiscal year, FY25-26. They expect their effective tax rate for the full year to be around 25-26%. Tag outro.
All right, so let's wrap this up. If we pull it all together, what are the key takeaways for you, our listener? Torrent Pharma had a pretty positive Q1 overall.
Definitely. Strong performance driven mainly by their branded markets, especially India, where they're outperforming significantly, and also Brazil.
And they're clearly investing for the future, that R&D spends, increase, the field force expansion, and then there's the huge JB Pharma acquisition, which is set to transform the company.
Right. There are challenges, of course. The supply issue in Germany is a drag, but they seem committed to working through it. And the U.S., while not profitable yet, is showing definite signs of improvement and growth.
So understanding these details, it really helps you see how a big pharma company like Torrent juggles growth across very different global markets, right? How they handle regulations, which can be both hurdles and, as we discussed with Brazil, potential moats.
Exactly. And how they make these big strategic bets, like the R&D push and the JB Pharma deal, to try and secure future growth and deliver those essential medicines. It's more than just the numbers on the profit and loss statement. It's about the health of the industry and how it impacts all of us.
Absolutely. And as we close out this deep dive, here's something to think about. Torrent is putting a lot of strategic weight behind its chronic disease portfolio and aggressively chasing new opportunities, like the semaglutide generics in markets like Brazil. So considering these moves, what long-term shifts in global health needs or market dynamics might they be anticipating? What future trends are they positioning themselves to potentially lead or even dominate with these calculated investments? Something to ponder.